Almost got caught jaywalking by these guys. Gotta be careful. Hey, how's it going? I think I'm lost right now. It's important to also talk about rebalancing. Come on now, buddy. I'm walking here. Hey guys, it's Aman from Our Rich Journey, and I am out here in front of the New York Stock Exchange on Wall Street to talk to you about the current bull market that is taking place. If you have been keeping up with the stock market over the past 6 months, you know that it has been on a tear, up over 17% year to date. Now, this is in contrast to last year, where the stock market was in a bear market most of the year and ended up being down about 18% on the year. And so this year has been all about the recovery. And so on today's video, I want to talk about some of the things that you guys should be doing to take advantage of the bull market. How should you be investing? And so I want to talk about actually 9 different tips that I have for you when it comes to growing your wealth in this new bull market. So as we have this discussion, I'm going to walk with you guys around Wall Street, where Christine and I have been staying for the past almost 2 weeks. And so we've had our chance to experience all of what New York has to offer. We went to a WNBA game. We had an amazing meetup with all of our fire friends here in New York City. And we talked a lot about the current state of the market. Now, there's one thing to keep in mind. The stock market is known for its cyclical nature, with periods of growth called the bull markets and periods of decline known as bear markets. Now, despite these downturns, the market has always bounced back over the long period, largely due to factors such as economic cycles, corporate profits, monetary policy, and investor sentiment. Investor sentiment. Now, that is such an interesting aspect about investing, because I think it has a bigger say-so in the direction of the market than a lot of these other factors that affect the stock market. Investor sentiment. And right now you are feeling an optimism about the stock market that we haven't felt over the past 2 or 3 years. People are seeing innovation, they're seeing profits, they're seeing companies become leaner and smarter, and they want to put their money to work in those companies. And so I think this is going to be the bull market that is more so about efficiency and growth than anything else. So you're going to see a new phase of wealth that comes from new technology. All of these factors contribute to the growth in the stock market, to the sentiment of the investor. And there's something else that needs to be mentioned. The stock market feels cheap in certain sectors. And what I mean by this is that investors are seeing value in the stock market in technology, in retail, in healthcare. They are seeing areas of the stock market where, because the bear market was so bad in certain sectors, they are seeing things that are on sale or a deal that they want to take advantage of. I mean, you look at companies like Amazon, Google, Facebook. These were all companies that during last year's bear market really took a beating. Their stock prices fell significantly. But over the past 3 to 4 months, these stocks have been some of the first ones to recover, and there's still a lot more room for these companies to go as far as their stock prices. I mean, Facebook is very far from its all-time high, and Facebook has been coming out with new products, new services. They're talking about, obviously you've seen Threads, but they're also talking about having their own version of ChatGPT. And so these companies that still look relatively cheap to where they were before, these are other areas that are going to grow the stock market. Now, keeping all of that in mind, I want to talk about 9 different things that you should be doing to take full advantage of the bull market. The first thing that you should be doing is doubling down on your self-education when it comes to finances. We are strong believers that investing success lies in your education. When you develop that financial literacy, you can move forward with your investments with confidence. You can make an investment decision that helps you over the long run because it is consistent with what you've learned, it is consistent with your plan. And so I'm going to encourage everyone to seriously double down on that. Now, as I cross the street, the next thing I want to encourage people to do is look more towards diversification. So with diversification, the idea is that you are going to distribute your investments across various asset classes and sectors to mitigate risk. Now, this ensures your portfolios aren't overly reliant on the performance of a single asset. So diversification is such a fundamental aspect of investing. It's all about not having all of your eggs in one basket. It's about spreading your risk. It is about getting full exposure to other aspects of the market that aren't correlated, so that maybe if one area is underperforming, another is performing well. It allows you to really mitigate risk. The next thing I want to encourage you guys to do is take a harder look at your asset allocation plans. Now, these are really a fundamental aspect of any investment plan, but it's how you are going to divide your money amongst the stocks that you invest in, the ETFs, the bonds, the cash, whatever the case may be. It's how you are going to divide your money up and proportionally invest it in the stock market. And the proportion or the percentage dedicated to each depends on factors such as your financial goals, your risk tolerance, and your investment time horizon. All of these things are things that you should be writing down somewhere in an investment plan. So now that we've talked about diversification and asset allocation, it's important to also talk about rebalancing. This is, come on now, buddy, I'm walking here. So now that we've talked about asset allocation and diversification, we must talk about rebalancing. This is such an important aspect of investing and something that people really fail to do consistently. You see, it's important that when you have your investment plan, that you, within that plan, also have a rebalancing strategy. Something that prevents you from really trying to practice market timing, but instead sets you up with a disciplined approach as far as buying and selling and reallocating your portfolio to be aligned with your original asset allocation plan. You see, sometimes people have the tendency to rebalance just haphazardly. And when you do this, it really can set you up to be investing in a very inefficient way. And so when we're talking about rebalancing, we're talking about regularly realigning your portfolio to maintain your desired asset allocation. Really, rebalancing helps you stick to your investment plan, because over time, certain investments may outperform others, causing a shift in your original allocation. So my next tip is understanding the risk versus return calculation. I know a lot of you want to get rich overnight. And with investing, there's an appeal to be as risky as possible because the returns may be there and you can achieve your financial independence goals faster. This you really have to be careful with, because a lot of people say they can handle the risk to get those returns, but find out quickly, as soon as there's a downturn and they see their portfolio start to drop, that they can't handle that risk in return. And for a lot of people that cannot stay the course, they end up seeing those losses on paper and end up selling too early and making those real losses. So this principle of risk tolerance is so important in helping you pick the investments that you feel the most comfortable with. And it's something that I think most people aren't realistic with themselves when they first start investing. They tend to think they can handle certain investments, and like I said earlier, when they find out that those investments have a lot of volatility, that they can go up and down in a blink of an eye, they realize quickly that they're not really suited for those type of investments. So now that we've talked about asset allocation, diversification, risk tolerance, rebalancing, let's get on to one of my favorite tips to talk about, one of my favorite investments. It is ETFs and index funds. I think this one type of investment, an ETF or an index fund that tracks the S&P 500, that tracks the total stock market, you can get a lot of these things that we talked about with just that one investment. You can get diversification. You can mitigate your risk. There are so many benefits to ETFs. We've done a ton of videos on all of the benefits, but it's something that I really encourage people to take a look at. Take a look at VTSAX, VTI, and see how those ETFs and index funds can really support your overall portfolio. Now, something else you should be looking at are sector-specific ETFs and index funds. Now, we also invest in sector-specific ETFs, and we only do this when we believe that those ETFs make the case that they will outperform the total stock market or the S&P 500, or they somehow provide some sort of counterbalance to our overall portfolio. My next tip to you all is to set up a plan for how you are going to consistently invest in the stock market. Usually that means dollar cost averaging a portion of your paycheck on a weekly, bi-weekly, or monthly basis. But investing in the stock market consistently can also mean how you're going to invest large lump sums of money. Because there are some of us that get cash flow in a very inconsistent method. Maybe we don't have a traditional 9-to-5 job that pays us every 2 weeks or every month. Maybe we're self-employed and we get these lump sums of money that come in inconsistently. Well, how are you going to put that money to work in the stock market? How are you going to invest that money? So when we were investing for financial independence and a large lump sum of money would come into our lives, our investment plan would say invest all of that money as soon as possible, get into the stock market as soon as possible, because if it was there sooner rather than later, that meant it had more time to work for you in the stock market. It had more time to go up and down, but over the long term, go up. My next tip is to stay up to date on the financial news that may be affecting your investments. Now, depending on how you are investing, what assets or what companies you are investing, it's so important to stay up to date on their quarterly reports, on how those companies are performing, what's going on with interest rates, what's going on with the overall economy. Now, with that said, it's also really important to avoid impulse decisions based on short-term market fluctuations. I know the news can sometimes paint a very scary picture of the economy, and a lot of that news is really sensational. It's news to sell clicks, to get people to do or watch certain things. Be careful using those sensational stories as a proxy for how you should be investing in the stock market. Again, if you have an investment plan in place, your investment plan should be guiding you on how to react to certain news stories. And this brings me to my last and most important tip for everyone that is pursuing financial independence with plans on retiring early. You must keep a long-term perspective when you are building wealth for FIRE. Now, the market is going to have many fluctuations. There's going to be bear markets. There's going to be days where the stock market drops 1,000 points. And these are going to feel like this time is different. Well, history has shown us that these things happen. They happen every so often, and the stock market always recovers. And in fact, it goes higher. The stock market will reach all-time highs again, and it will go higher and higher, and there will be some dips. But if you look at any chart of the stock market over the long run, it goes in one direction, and that is up. And so I encourage you to consistently invest in the stock market with a long-term perspective, to see your investments and the money that you put in the stock market as money that will fuel your FIRE journey in the future, that you will live off of for now and forever. And so it's important to keep that perspective, especially when the market goes through certain changes. And so with that said, I hope you guys are enjoying the view of New York City. Christine and I have been here for 14 days and we have just had an amazing time, but we are heading back to Portugal tomorrow. And so we will see you guys next time in Portugal. And so if you guys have liked this video, please do me a favor, give it a thumbs up, subscribe to our channel, and join the journey.